All right, it's me and the dog again. Welcome to Trading Trends. It is Wednesday, October the 2nd, 2024, right after market close. Theme of the day, as you might have guessed it, all about China again today, ripping another 7%. We're looking at where the next resistance levels were. Well, I think they achieved some of them today. We'll look at the charts today, and we'll have to zoom out of the time frame to see where the next, like I said, targets lie. But new 52-week highs today for China and EEM, up 2%, a new 52-week high as well, while stables and retail drop 1%. Quite a move as well in rates higher today. And utilities in Canada reached all new all-time highs. So let me share the doc here, give you something to look at besides my mug. And then here we go. So yeah, this is what I was kind of scared what AI was going to give me with, Chinese headline, but this was pretty good. Chinese stock market stuff, and I put some more in there. And you got your little House of Dragon. I think I could say that here. And then their market was definitely up. And I'm guessing that C is for China. So, So here we go. China surged, like I said, 7% to new 52-week highs. EEM at 2%. Staples and retail drop 1%. Utilities and Canada reach new all-time highs. Interesting to see Canada a bit as well, because before they used to trade 1-for-1 with oil, and oil is not quite making new even 6-month highs. And Utes, that story. That same dance has been going. Here, when we get under the hood of the day, so China, massive. The large cap index up 7.5%. You're seeing the companies under the hood. All of them are making 52-week highs. JD, Baba, Billy, I think like Trip.com, like you name it. Most Chinese ADRs are at multi-year highs now. We'll take a look at FXI, KWEB, specifically the Chinese internet, Slither, that tranche of it up 6.5%. So today the weight is with the FXI. We'll take a look at the gains on the week for this massive rally. 52-week highs for KWEB, and of course EEM adds 2% as China is a major allocation in that, and that's new 52-week highs. The losers today, what did they take out back? My baby, not my baby, I right-sized it, but consumer staples, bad day today. Not a lot of love. We'll see if that continues or not. We'll see. And retail, I'm also long Abercrombie and Fitch. So not a great day in the portfolio. It's going to be different ways to lose sometimes when you trade, unfortunately. So retail down 1.3%, and then the jets, the airlines down 1.2%. Obviously, higher oil doesn't help them quite, but it had the opposite move last week. Oil was taking it, I believe, on the chin, and jets were also down one time. So the correlation is a little bit funky on that. And then we'll get into, again, this is more of a recap. So top 3 gainers of the past 5 days. It's been Chinese internet. I didn't want to represent every China ETF, so this is Chinese internet and China. Volatility is up 9% over the past 5 days. And then the copper miners has been a strong area to go in. Very high correlation with China. Chinese need copper, copper needs China. And the top 3 losers of the past 5 days: Bitcoin, no love, or there's a thought, or Chinese dumping Bitcoin and getting into their own very cheap valuation companies, publicly traded companies. So we'll see. And then Taiwan not feeling the emerging markets law, down 2.5%. Obviously, not be really the benefit for China's gain. And then gold miners falling out of favor a bit, down 2%. So again, top trades of the week, some real big alpha here. KWEB up 30% in just 5 days for an average of 6% a day. Absolutely remarkable. And the Bitcoin getting handled quite a bit to the downside, down 10% or an average of 2% over the past 5 days. And then long volatility, it's making a comeback. All right, so let us go to the chart first. Since I have that 4-minute setup, if we will. We'll call it a setup or a prologue or whatever. All right, so let me share the screen of the charts now, since why we're all here, besides probably for. All right, so you can get down. Here his name. So here's the 1-day chart. So it's interesting. So here's the action today. So here's the 9:30 bar where we opened. Today was really, I'll check the SPY volume at the end of the day. I think it was 35 million shares. That is Thanksgiving, July 4th type volume week. So really not a ton happening. So here we hit a low at the 9:30 bar, decent volume for the start. And then we hit a peak at 11:30, and we were range bound throughout. This black bar is a 200 bar moving average. So it stretches back 200 bars, and each bar here represents 30 minutes. And then, of course, the almighty important orange line, the volume weighted average price. We traded pretty well after the afternoon. So basically after the European close, after 1 o'clock, traded well. but still range bound, and we trade above VWAP 569.46. Most of your indices were up today, and vol did come in about a percent or so. As you zoom out, again, so more of the macro look, I have about October 15th for this distribution phase to end for SPY, and that should take you right around 565 or so, possibly as low as 555 to 560, depending. We'll see what kind of sell-off we get. And then I want to buy that dip in mid-October. It lines up with seasonality. I think you're going to have a bit of reduction of volatility leading into the election, and then S&P 6,000, I think, is coming. A little bit of fear because of the new leadership. Semis definitely doesn't look like the hottest, the girl that he came with to the dance, I think is the phrase. Home builders looks like a better area, even though semis did have a great day today. But we're looking at it, and it seems like it's lost its shine a little bit, as it were. So here is the SPY. All that being said, still overall a great trend. Telling you to buy it in about 2 weeks' time. You're going to want to, and I think your setup is going to be right around 564 if you're absolutely lucky and you get a once a quarter type gift. And I'm talking about you get one of these outside the Bollinger Band. You get some sort of a global maybe fear crash. It's literally happened only 1, 2, 3 times. Maybe you get it. You're out, like I said, quarterly. That would send you to about 540 right here outside the band, 540. So $30 from here, you're talking, that would be a hell of a discount. That's only 5% lower from here. So bigger spots over the next couple of weeks, but you're going to want to buy that bottom, in my opinion. All right, so let's look at the charts that matter today. We've been talking about it. This is basically the thing that's moving markets is the FXI. This is, again, so you got to look at the candles. So, and for it to give you a picture. So this is interesting. Finally here. So you got a massive doji. So meaning the price opened here, and I'll put numbers to instead of saying the thing. So we opened at 35.65. We traded all the way low to 34.5, we'll call it, and then we ended up closing at 35.5. So investors pretty much confirmed that price, and the buying is not done yet. There was some doubt here that sent it lower by about 3%, but at the end of the day, look what we're talking about, up 7%. So you got to zoom all the way out of here. This is absolutely just a freight train going forward. So we went to the 2-year chart. We were talking about it was going to take this out. The January 23 highs, it did it. This candle still has strength. Okay, so this brings us back to the longer term where each of these bars now is a week. So the importance of this is a 3-year chart, and now it's above a very important trading line. It's the 200, again, bar moving average, each bar representing a week. I feel like I'm taking a class. So it's 32.62 is where that is. That's above that by 10% right now, and the candles still look pretty significant. In fact, all the candles look strong since September the 9th. So I don't think this is done yet. So you got to go to the 5-year. We're trying to examine where this can finally try and take a breather. If you feel fantastic at the gym and you're on the treadmill and you're hearing your your Black Sabbath song or whatever it is for you, that's for me. You go through that, that personal rep, you can really push yourself, right? So I'm just seeing here, and you're looking for your heart rate, and you're like, oh, I could do a little bit more. So this looks like, the next area of real heaviness here is really actually before this moving average started to dip. And I think there's going to be some points with these November 2021 levels, and that's going to be 41. That's $6 from here. Maybe it makes it over time, but I think that would be the next target. So this is you have to also think of it. Obviously, this thing has ran up massively in the past a week, 2 weeks, but this is a country on sale and just so happens to be the second largest economy in the world. So if there's any opportunity, you get it on sale, whether it be people that live in homeland China want to get it on sale, or people here, hedge fund managers. Obviously, there were shorts selling here. It used to be one of the most successful shorts of quite some time. Every hedge fund manager was talking about it when we were doing our year-end type review type thing. China was just finally getting out of that. So lows were literally just put in here on this basis in January, and then range bound, it's working out of it. So very impressive. Let's keep going here. If you have a ticker or something, put it in there. I really want to keep these a little bit diversified, but really all the action was in China and Chinese internet and emerging markets. So this is really all that matters. Bonds did have a big move today, rates higher, but let's take a look at this stuff. So again, keeping the same time frame, 5 years. So this is at Chinese internet, a little bit weaker than large mainland China. They also had massive real estate stimulus massive real estate stimulus. So those companies, I think that index specifically for the real estate was up 12%. So it's almost, think about it, of different tailwinds for different parts of the economy over there. So you want to be diversified if you're buying into these Chinese markets. It's not just, BITO. So Chinese internet has reached, look at that, magically, its 200-day moving average, but the candle still looks strong. It's getting a little bit smaller, but this looks like maybe the next stop for this would also be their 2021 highs, and that's going to be at $54. So I'm not saying hold your breath for that, but that looks like to me that would be the next area, big area that this rally would be tested. So I mean, I'm just doing some math. That's a massive rally. That's 45% further from here. We'll see. That could be a longer term projection, considering it's already up. It's up 50% in just a couple of about a month or so. So absolutely a rapid move in internet and Chinese internet stocks. And then emerging markets. I don't have anything there. Okay, yep, that took a while to load. Alrighty, EEM. So even if you just own EEM, right, you wanted just non-United States diversification. So this looks a little bit much heavier. Maybe you can get a tell, right, based on the disparity of China and pulling up something like this. But this still looks mega strong. And again, I'm sticking on a 5-year time frame. Almost never do that. So this has been a wall. This moving average, this is on a very long basis, has basically been the same level since June 2021, right around this $45 mark. It doesn't really get much further below. It doesn't get much further above. And now it's actually gotten above that here, $44. You can see where we are, 47, as it's catapulted above that in the past 3 weeks or so. Now what? Not to sound like a broken record, but I'm just going to do it based on the charts first. Yeah, again, the 2021, the second half of 2021 highs, it looks like it wants to go up to 52, which would be another 10%, a much more measured move versus a potential 45% rip in something crazy like Chinese internet. If everyone in China is on, dating again and spending money on JD.com buying shirts and houses. So that's what they're trying to invest in. This will be an interesting tell. Definitely look at the EEM, see how much this can rally. Again, this has gone from 40 on August 5th, day of the, obviously this is a while back. This was the Japan global crash, and it's at 47 now. So just a massive move for all things emerging markets. Again, I'm waiting for the mean reversion consolidation, but that in 2 cents, and you're going to get your face ripped off. So not entering the trade. You could probably chase it higher short term with this, or with for specifically this one, it goes for the others, probably with a 48, 49 short term target. But to understand that it could and should mean revert to 45 within it, any point in the next 2 weeks. All right, that's just math. All right, so let's look at the losers. Staples, down 1% is a big move for Staples. These guys are Walmart, Costco, Coca-Cola. They don't move big. So when it moves down 85 bips, it's pretty big. So I am long this. I'm in the December. What am I in again? Let me check my pad here. I am in the, let me alphabetize, the D85 calls. So still have a lot of time on this, 2.5 months. We'll see what happens. I do need 52-week highs for this. I think at worst case, I have a floor of this around $81. So right around here, 81 even. I don't think there's much pain coming. The high was at 84.5. And then I think it'll bounce around 83. I think it'll oscillate right around 83. So a nice bump there. And then ultimately, I do think it will reach $85 in the next 2 weeks, 2 to 3 weeks. Maybe a little bit of a slow burner considering it's Staples, but love the chart. Didn't get bullish confirmation here. So meaning the price hit new 52-week highs right here. And I didn't get that. The RSI started to slip from a 71 and actually started making a move towards 69. So not superb there. And you now have 3 consecutive days of selling. I do think it will mean revert higher, though, shortly. So a lot of rotations happening under the hood, though. XRT, retail got hit pretty hard today, down 1.3%. Let's take a look. So this chart has not looked super great. It just looks pretty heavy with high struck back in. All right, let's go back to our 1 year. Now, we don't need stuff that's going off the charts, literally, like China. So we'll go back to our 1 year time frame. So May was when this group peaked, retail, and now it's had some, almost reminds me of the Bitcoin chart in a way. Go figure, right? With breaches under the 200-day in August and again in September. And now let's see. I don't think this group is going to get a lot of love. It's unfortunate because I'm also long Emrg and Fitch, but I think this makes its move towards 72 over the next 2 weeks. I think this seesaw with the 200 moving average will continue, and it will breach and take another. It took another step forward on that today. All right, and then the airlines, no bueno today. Airlines down 1.25% or so, down 1.17%. These have been a volatile group as of late. I think we talked about them last week. So these have been, on the upside. A nice clip here of the 200 moving average. Nice strength here on September 13th from 19 to 21. A nice move, nearly 10%. Now, what I think this is going to make a move towards about 1970. I do think the 200-day moving average will hold. I think, obviously, they would be beneficiaries if oil didn't rip. But this looks like I would rather be in something else, but this doesn't look like a horrendous area. I do think this will pull back to about 1970, holding a 200-day moving average on a pullback before you want to get, longer later. All right, top 3 gainers in the past 5 days. Let me see. Oh, you make a sheet with crazy Chinese stuff on it, it disappears. That's what they want you to think. No, well, there we go. Okay, bang. So again, the works of this. I don't know what happens with my my Google Sheets. All right, so top 3 gainers the past 5 days. KWEB, absolutely freight train. I'm not going to look at the chart though because we already did. It's up 30% in the past 5 days, an average of 6%, which is what it put through today. And the candles don't look done yet. Probably going higher. You can chase it if you want. It's probably going higher tomorrow, but understand if you wake up and it's down 6%. I mean, it's par for the course too. So. Sounds crazy because it is. VXX, the next one. So interesting, not really great warm fuzzies when you have this as the leading gainer. So volatility up 9% over the past 5 days. So pretty good, healthy, robust, almost 2% average a day. I still think this is going to the upside. Obviously, it coincides with my distribution phase with the S&P. And I think this will make a move. It was down today about almost in 1.5%. As you can see, the 200-day moving average on this is 52.59. It is still above it, even with today's decline. And I think this tries making a push towards 58 to 59 over the next week or two. So that would be about a 10% rally from here in volatility, which obviously infers lower returns from the markets. All right, COPX, copper miners up 5.5% in the past week. Not a bad area, correlated with China, as we said. This is overbought technically in every aspect. So while it's had a nice week and everything else, I do think this wants to have, and this is a volatile group as well. I think this wants to head towards 44. I would love to catch this on the way down. I think this might head to 44. You'd need some kind of a pullback in China, obviously, to cooperate, and we'll see if that's coming. It doesn't look like it is. I think this is due for a 10% pullback, which is hefty. And it would still be holding a rising 200-day moving average and still be holding the August high. So just came too fast, too quick with this China rally. I mean, literally, this has gone from 36 on 9/11 all the way to 48 on 9/26 and counting. So this will mean revert. This is, like I said, correlated with China. I may not come down that maybe 45, but that's still going to be quite a decline. But in terms of also applying smaller candles and trying to get derivative takes, this has less enthusiasm than obviously the large cap China chart, which isn't to get direct stimulus measures. You put down 15% on a down payment of a house. These are legit copper miners. This looks like it's having a little bit of a tough time getting towards 50. I think it's overdone here. I think this mean reverts towards at least 46 over the next 2 weeks. All right, top 3 losers of the past 5 days. We're talking about over and over. It's a loser boy. It's Bitcoin. Bitcoin down 10% over the past 5 days, or an average of 2%. It did that today. Now what? We'll stick with this chart. Relative strength sell. Don't like it. Looks like it's going weaker. I think it's going to 1620 over the next 2 weeks. So right about there. So equating with the lows on September 6th and the lows that we had on the August 5th Japan crash. So not really confidence inducing when you're talking about those periods and you're having other areas like China, 52-week highs, emerging markets, staples, all that stuff like that. So not really giving me warm fuzzies. Bitcoin, specifically BITO, this one. The Bitcoin itself is hanging in there. I think it's trading 60 even, which is exactly what it looked like it was going to do after it peaked at 66. Had that momentum, took a lot of energy exerted to get to that point, and then flushed lower. So, I think this is getting to about 1620 over the next 2 weeks or so. And that would just going to give you a percent on what that reduction would be, because I don't think it's 5.5%. So I guess garden variety for Bitcoin, not for the S&P, but for Bitcoin. All right, and then Taiwan again. China's gain is not Taiwan's. So Taiwan up today, very fractionally, up 17 bips, but overall they're down 2.5%. You can see here it's starting to come lower. They had a peak here on September 26th, and it's come down. Yeah, I don't like this group. I don't think they absolutely drop from here, but I do think they head towards 50, still holding a 200-day moving average, $50 to $51 over the next 2 weeks. All righty. And then lastly, for the top 3 losers of the past 5 days, gold miners out of love. Gold miners down 2.3% over the past 5 days. Today down 20 bips. This group was on fire, though. So we were saying, pick your spots, wait for this to get on sale. I still think they're not going to be in favor for this next period for about 2 weeks or so. They probably oscillate around the 21-day moving average around 39.65, implying a small drop from here. And if things get ugly and this group gets taken out back or something like that, it gets towards 38. But this is a love group, long line of buyers for this. Literally, you could see on the chart, overbought July, overbought for this whole period in April, overbought in December. These are like Taylor Swift tickets. So this is a hot group. Give it 2 weeks or so. If you get it around 40, that's nice entry point with a target up to towards 42. All right, top 3. The sheet always disappears. It's bizarre. I swear, I feel like Rocco's doing something. All right, so top 3 absolute trades of the past 5 days. I think Rocco's doing something. It's impossible. He hit his head on my phone. I have to share this the other day, and his head is so hollow. All you heard was, it was like my phone hit a coconut. It was hilarious. Hold on, pay some respects. People don't sign off until they see you, Rocco. So top 3 absolute trades of the past 5 days. Long KWEB up 30% in 5 days. Absolutely insane. It probably does 3 to 6% again, though, to the upside. I'm just looking at the charts. Short Bitcoin looks weak. Does not look, no warm fuzzies there. Like I said, 5% pullback, I think, coming over the next 2 weeks or so. Filling in with the rest of the overall market pullback. And then, again, confirming this, long volatility, up 9%, in the past 5 days, kind of tells me the same thing. All righty. Peace out. I will do a recap video on Friday to recap this crazy Chinese week. Bye.